everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm so grateful to be here every Tuesday and Thursday from 1:30 to 2. This morning, we saw the S&P futures make, again, new all-time highs, the NASDAQ futures, and around 9:10 this morning, I tweeted out, I said I would fade the rally, and I would be looking to exit any longs. And boy, oh boy, S&P's hit that 58.30 level. We all just dropped down to 57.79. So we dropped roughly 59 handle, almost 60 handles off the highs on the S&P. The NASDAQ futures, we were trading about the 20,520. So we dropped roughly about 300 points on the NASDAQ. Again, the reason why I said to look to short was all based upon the 60-minute time frames. And the title for today's show is how the 60-minute sell divergences really kicked the market from stopping the market from keeping the highs intact. So when we had the new highs, again, you can, based upon my work, I have 5 conditions, and these conditions are all predicated off my indicator 4 and using multiple time frames, the 15-minute, the 30, and the 60-minute time frame if you're going to do any type of short-term trading. And basically what happened was when we were making new highs right after the opening and we pushed up, I said I'd let them have them. We had the shorts on the indexes and a lot of individual names that are down substantially. Pre-market, Tesla's down about almost 10. Meta is down, I think, hit a high of 577, down about 14, 15 on that alone. But more so, what we were able to see was the ability for the markets to push up, make the new highs. And I tweeted it out on X, and I said I would fade the rally and I would be looking to exit longs into this. When you get what's called, again, with the 5 conditions, a trend, a buy reversal, a sell reversal, a correlation, and or a disconnect, you then have, of the 5 conditions, you have 2 strategies, a buy and a sell divergence. So here, for example, if I can show you the chart right now, using my indicator 1, right, again, 85% of the time I use indicators 1, 3, and 4, and then 15% of the time I'll use all 4. If you look here, making new highs, all right, we filled the gap. Amazing, we filled the gap. We actually went negative on the day when the S&Ps just ticked to 57.79. But if you see here, we were making new highs, and the MACDs on the 60-minute time frame were not making new highs. It's if I draw my horizontal line, you can see that the MACDs did not confirm the highs. The Qs did not. Okay, the Russell faded, the RTYs. This was a classic, in my opinion, textbook non-confirmation on the new highs. And basically, if I didn't have my software aligned like that, I would never have been able to see it, right? I'd never be able to see it, okay? If anybody has any questions or wants to learn more from me, you can text me or call me at 914-500-7484. And then if you go here, looking at the 15-minute time frame, which now reversed to sell. Let me just see here. What am I doing here? Where's the spiders? I got to change the 15 here. I know where this is. Okay, I'll just change it on my own here. When the 15-minute time frame reversed to sell right here at about 10:45, basically I stated that the highs are in for the day. So now we went from the 15-minute, the 30-minute, and then the 60-minute time frames all in buy mode, okay? And then once the 15 reversed to sell, now you have what's called a disconnect. So when you have the disconnect, you were able then to see how when I got the sell reversal on the 15-minute time frame, I got the sells, and then I knew that the highs were in for the day, all right? Same thing with the QQQs, reversed to sell. Same thing with the Russell, reversed to sell. So again, we pushed up, we pushed down. We just got a little bit of a bounce of about 13, 14 points on the S&Ps from a deep oversold condition, looking at the 15-minute being oversold and the 30-minute. again, what's really important here. Let me just highlight the box, and I'll put the 5 minute time frame back up. So we got this deep push down here. They pushed down to 79 on the S&Ps and just ripped about 13 from the deep oversold condition on the 30 and on the 15-minute time frame. What's important to be able to realize these and understand these patterns is I spent nearly 10 years of my life building this software, right? And to be able to use what I call combination methodologies, combination theories, okay? Whether you're looking at multiple time frames, that's a combination, right? Whether you're looking at the indicators 1, 3, and 4, that's a combination. So everything I do is based upon methodology that I call combination methodologies, okay? And it's important when you're trading the futures markets, I've been saying this now since we've been on, that you need to look at the underlying ETFs when you're trading the U.S. session. What we look at in the U.S. session, we look at what's called RTH, real-time hours, and what we look at is the ability to then take the underlying ETF, in this case the SPY, and then look at the continuous contract, which is the S&P futures. The math on the spiders, I calculate what's called RTH again from 9:30 to 4. And if you look at the S&P futures, I look at the continuous contracts, which run about 23 hours in a day. And when they line up, they line up. So when the spiders reverse to sell, right here, when the spiders reversed to sell, it correlated with the S&Ps. You got the first push up here on the 15-minute time frame. This was a good short. S&Ps were trading around the 58.05, and then they absolutely dropped about north of about 22, 23 points on the S&P futures. Really good short. And then if you look at the SDSs, the Pro Ultra short, okay, I look at that as well. That gave me a buy and beautiful pullback. When I got the pullback on the SDSs, I got the short on the SPY to confirm. That's why the S&Ps dropped on that push up there. S&P futures got right below the 58.04, I think the 58.03 and a half, and they dropped sharply. If anybody has any questions, please ask away. Again, I've been doing this now 41 years of my life. It gives me great joy and privilege and honor to be here every Tuesday and Thursday from 1:30 to 2. Tradier Futures has allowed me to now share my experience, share my knowledge, and share my technology with you so you can do the following. Be consistent in the markets, have discipline, have confidence, have the patience, wait for the pattern, and then have the passion to really want to do this, right? It's important to realize and understand that when you're doing this, you want to be able to be consistent, hit your goals. I do a pre-market analysis, and even in the pre-market, some people hit their goals early in the morning without capturing this pretty big drop, which we didn't capture the whole drop. We covered a lot higher up, but we were able to then trade around the positions and look at other trade ideas. All right. With that being said, trading futures for me and having Tradier being aligned with Tradier, the micros are $50 for a contract, and I believe $500 for a big S&P future. It's important that when you're trading the market, especially those who are new in trading, you want to be able to trade on a simulator. Great simulator here at Tradier Futures, live data. And what you want to be able to do is practice. You have to learn, for example, the scaling in and scaling out. So for example, let's say I would look to short the S&Ps 93.5 up to 98.5. Okay, I'd be scaling into a position. I put an even stop, 5,800 per se. And then if I'm scaling into the position, this is just an example, and then it drops, then I'm covering and lowering my stop along the way. So let's just say, for example, I said, look to short S&Ps here, 93.5 up to 98.5, a 5-handle range. I like to do what's called pyramiding, which means you sell some here, then you double up here, you triple up here, and you quadruple here. Okay. And yes, there is more risk to that versus doing 1, 1, 1, and 1, right? So what's important that you really need to understand is everybody's going to do things differently, right? People may say, okay, Steve just gave a range 93 and a half, 98 and a half. I'll offer some at 94, maybe. Maybe I'll offer some at 95 and a half. I'll take, 2 or 3 or 4 entries for the position on the sell divergence here. Or, I may just, go 1-1-1, or I'll do the pyramiding. There's no right and wrong. Okay, there's no right and or wrong. It's the way you feel comfortable in your ability. Okay, that is the most important thing that you need to really focus on. Okay, and when you focus on trading the markets, right? You want to set goals for yourself. Whether your goals are a dollar goal, or if your goals are how many contracts you can, how much money you can make on each trade, and then compound your returns. So many people have come to me from all around the world to learn how to trade futures. It's given me such a great joy because I could talk about this until the cows come home. All right. Because literally, I love it. I love that every single day is a different day. I love the fact that when people want to learn and take the time, I'm there to assist them and help them. Okay. If anybody has any questions, please ask away. Okay. Again, this is our last Back to the Future show for September. We'll be back next Tuesday from 1:30 to 2. So the S&P's just got this deep oversold condition, traded below 5780, just ripped about 15, 16 points on the S&P. NASDAQ futures just ripped about 55, 65 points right now. Again, in about 2 minutes, we'll see the 15-minute time frame get somewhat overbought. And one thing I will tell you is that, like right now, for example, the 15-minute MACD on the S&P futures has a lot different look than the underlying ETF, the spiders look. And so, for me, it's fine. Everything, again, indicator 4 is telling me we're in sell mode. But more importantly, I have to look here because the continuous contracts on the NASDAQ and S&P futures have a complete look and feel than the underlying ETF on the QQQs and on the spiders. Okay. Being consistent, okay, hitting your goal each and every day is important. And it's important because you want to be able to come back. There's nothing greater each and every day than for you to come and say, look what I made. Look what I took out of the market today. This is amazing. This is a huge success in being able to really take the money out of the market each and every day. About 3 weeks ago, I heard someone tell me they made $9,000 and they gave it all back and then $1,000. That's a $10,000 reversal. And I think that's completely ludicrous to have anybody like that to have that. That's not a good feeling to have, right? Right now, again, we're just pushed up here. The spiders right now are up about 16, 17 points off the low there. Looking at the bigger time frames, again, now the 60-minute time frames look like they may want to get another push up here. The spiders were the one here on the 30-minute. You can see right before we got on, the spiders deeply oversold here, filled the gap, and then right here you can see the low right here, the 169.88, and right now we're almost up $1.80 off that. Okay, still a little bearish here on the 15s. Let's see if they can get one more push down here on the S&P futures. So what's important, again, is to identify the patterns, identify the strategies, and understand how to use these indicators, and to be able to use them effectively in a way that will give you the best results each and every day. Okay, 30-year bond futures were down almost, I would say, more than a half a point on the day. Now they're practically unchanged. I did get a buy reversal on the TLTs here on the 15th, so that means that the lows are in for the day right now on the 20-year bond future ETF. Okay. What else? Just looking around here, I would have to say, and I just want you to know that when you're trading futures, You want, whether you're trading index futures, 30-year bonds, gold, silver, you name it. Our index futures like the Dow futures, the RTYs, the S&P futures, and or the NASDAQ futures. It's really important that you use multiple time frames, right? I have on one of my charts here, I have the 5-minute, the 15, the 30, and the hourly. And for me, I think the most important thing to recognize is when you have your charts there and they're all aligned, it's pretty much very, very powerful. Today, we had just got sell reversals at 1:30, right when I came on the USOs, and the USOs now are negative and in sell mode on the 15, 30, and hourly time frames. But when the USOs were trading 70, there was a nice sell divergence on the 30-minute time frame on the USOs. Okay, right now the S&Ps have bounced off that 79 level. We just rallied 18 or off the lows there, and but it's okay because we want volatility. Yesterday there was a period of about 45 minutes that the QQQs, the Nasdaq futures, just stay within the 30, maybe 40 cent range on the QQQs. So again, what you want to do is trade the right patterns, identify using my software exactly what's happening, identify the pattern when the 15s reverse to sell, and then you get the sell reversal on the QQQs, and then you get the first bounce at 12 o'clock on the Qs above the 489 level, and then boom, it drops about $3.50, $4 in the next 1, 2, 3, 4, 5, 6, 7 bars. That's a pretty nice trade. That's a very, very nice trade. Does anybody have any questions here at all? Anybody? Again, I'm so honored to be here every Tuesday and Thursday, learning the markets for me, being able to guide you along the way to help you understand how, when you're trading the markets, you go from paper trading to micros. From micros, you go into the big full contracts, right? And and again, whether you're trading stocks or whether you're trading index futures or options on index futures, it doesn't make a difference. You want technology to give you the best chances in learning. My stuff that I have here, I spent nearly 10 years of my life building, and it is very, very difficult. But if you put your mind to it, it doesn't become that difficult. Let's get some water. So again, understanding the pattern, being on the right side of the market, understanding how to use combination theories, okay, combination methodologies. This is what I teach every single day in my live stream from 9 to 4. This morning, I thanked the good Lord. I said, please push them up. Okay, please push them up right before the opening. They did. We caught a nice long on the S&Ps, and they rallied up to 58.30, I believe. And I said, just let them have them. I said I would just be shorting up here. And, we got such big push downs on so many different names, but the indexes immediately dropped down to like that 58.04, rallied back up, and then dropped. Okay. Good evening. Do you take into account the strike price when trading S&P? Hi, Anissa. Well, I look at the futures markets. I don't. If you're trading options, I don't. I only look at right now. We're on the December contract, Anissa. If you're trading options, you would want to do, in my personal opinion, you would want to trade at the money calls or puts. Okay, and that's where I think you're going to get the best bang. But if you're going to trade options, why not just learn? Excuse me. Why not just learn how to trade futures? And I'm more than happy to teach you if you like. Again, I can give you my phone number. We can talk later. 914-500-7484. Okay. Very nice to meet you, and I'm here to help in any way possible. So again, understanding that these patterns repeat themselves each and every day, learning from the pattern, learning from the ability to trade the market, learn from me teaching you how to look at, when you're trading the S&P futures or the NASDAQ futures, how you need to look at the underlying ETF and the importance of using the underlying ETFs, right? Um, it's really something to be said that when you're trading the markets, you want to have the proper technology in front of you, right? And so this is something that's available on TradingView, and people from all around the world use this. And again, I can help you in any way. Depending on your screen size, you probably would, if you have a big screen, you like a 30-inch plus, you would probably want to have the 4 time frames up, the 15, the 5, 15, 30, and hourly up. Or you could put the 30 and 60-minute time frame on different computers, give you more space on the 15-minute and on the 5-minute. S&P futures, I would look to cover any shorts here between the 91.5 and 94.5 range. S&Ps. We have what's called a triple Kabuski, a triple Lindy right now on the S&P. So any push down should make a higher low here on the S&Ps. We have what's called a buy divergence right now in a disconnect of the 5-minute. So we'll see if we can get a push down. Anissa, I hope I answered your question. Does anybody else have any more questions at all? Okay. Now, when it comes to trading the futures markets, a lot of people start off with the micros, and there's no harm in learning the micros. Yes, you can get eaten alive on fees, but Tradier has such great fees that shouldn't be an issue. Okay. But what's important is you go from paper trading, learning how to scale in. Like, for example, if you shorted S&Ps 93.5, maybe sold some at 95, maybe sold some at 96.5, 97. You got to have your stop in place regardless, okay? But let's just say, for example, you pyramided up. You sold 1 at 93.5, 2 at 95. You sold, I don't know, 3 at 1 at 90, 92.5. 93.5. You sold 2 at 95, 4 at 96.5, and then go any higher than that. And so that helps you bring your average. And yes, it also puts more money at risk, right? It puts more money at risk. Okay. Again, what trading the markets and trading the futures markets is my favorite, right? And when you're able to identify these patterns and strengths, using my technology, I believe truly in my heart, it will change your life. It will change your life. Okay. Just trying to see what's going on here. Okay. Very quiet now. I'm really surprised that after Labor Day, the markets are this quiet. Even when we had this decline from 58.30 down to 57.79, the markets were just like that. And for me, I think what's really important is to recognize the environment that we're in. Obviously, we're in election year, right? We're under 40 days. What is it, 40 some odd days, 45 days to go before the election, right? And again, without talking politics or anything like that, the markets do not like uncertainty, right? So that's another question. Why they're up at these levels, I have no idea, but I wouldn't own anything here if I had your money. Okay. So again, trading the S&P futures, if you do that, or the Nasdaq futures during the U.S. session, without the U.S. session, you can just trade it using my software. But if you use it during the day, you need to look at the underlying ETF, the spiders, and then and the SPY. Very important to have that up there. Very important. Okay. What else? 5 minutes to go here. S&P's just rallied. Well, if they tick at 79, they'll be up. Right now, they're up 17 handles off that low, 57.79.5, I believe. It's again, what to me, being consistent, learning the pattern, scaling in, scaling out, identifying using multiple time frames is something that I've used since I've been working on this since the mid 2004, 5, 6, 7, 8, 9, 10, whatever. How many years I did it? 2001 all the way up. But what you need to focus on when you're trading futures is once you hit your goal, you hit your goal. You can go back to trading, paper trading, okay, or you can switch it to micros where, obviously that's your choice if you want to do that. But what's important is to understand the technology, to understand my indicators, understand the numbers to the right, understand the patterns, the buy divergences, the sell divergences. I'm trying to put all this in a book right now, and once I start building out my new website to where people can actually see these patterns, identify the conditions along with me, I think you'll be in a lot better place. Before we have about 4 minutes to go here, does anybody have any questions? I'm really super excited here with Tradier Futures. I've known Dan and the team for many, many, many years. It's a great honor they asked me to be here. But for me right now, my goal, my legacy depends on your success. And if anybody wants to call me or text me, please do 914-500-7484. Looking at the 15-minute time frames, you can see these yellow dots right here represent the price action. Doesn't look like anytime soon that that they're going to reverse the buy here. Let me just see here. You can see the 15-minute time frame right here. Just get this here. You can see that the yellow dots are nowhere near looking like they're going to touch reverse and go positive here. So with that being said, S&Ps, I'll be looking to cover any shorts, just 92.5 to 95 if you're short here. 15-minute time frame should roll over here. The 30-minute time frame on the QQQs the 30-minute time frame on the Qs reversed to sell. So again, 15 and 30 are in sell mode, and the 60-minute time frames in buy mode. And with that being said, we have what's called a disconnect. And when you have a disconnect, you want to be able to understand how to trade it. Again, a trend is a condition, a buy reversal, a sell reversal, a correlation, and a disconnect. And of the 5 conditions, there are 2 strategies to each, a buy and a sell divergence. Okay? Again, if anybody has any questions, please feel free to reach out to me. My number is 914-500-7484. It gives me great joy each and every day to be on my live stream, and my phenomenal community of traders, and so grateful to be here every Tuesday and Thursday from 1:30 to 2. Have a great day, everybody. Be consistent. God bless you all. Beautiful pattern on the 30-year bonds. Just rallied 330 seconds. Gold's been a beast. Silver's been an animal. And all we want to do is capture the right trades. And that's what we do here each and every day on my live stream from 9 to 4. Have a great day, everybody. I'll see you next Tuesday. Enjoy the week and have a great weekend.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.